Welcome to First Mover. We'll look at today's action in the Bitcoin, blockchain, and digital asset. I'm your host, Christine Lee. Joining me are my co-host, coaching editor of Global Capital Markets, Lewitton, and executive director of content, Emily Lawrence.
Good morning.
Good morning.
All right, let's take a live look at Bitcoin. The CoinDesk Bitcoin price XVX index $42,090. Bitcoin shooting up just over 4% over the past 24 hours. Price ETX index is over $3, 3,000 per year. ETH is climbing over 3%. The CoinDesk DeFi index is at 4, over 3%. The most reliable reference prices for institutions since 2014, published under the CoinDesk brand, trusted globally. News event data. Top market act Ether at $3,000 level for the first time. Bridgewater, also the world's largest hedge fund, $1 billion in assets under management, is preparing to back its first crypto fund. Lawrence, what's happening with the markets?
Yeah, Christine, you're coming in choppy, and I suspect that's because you're in Barcelona, which is what's hosting right now the Avalanche get together, the confab. But yeah, as you were saying, Bitcoin has rallied above 43,000. ETH is above 3,000. We had some hawkish comments from Fed Chair Powell, and we're seeing some interesting things in the market right now in terms of interest rates. It's something we're going to talk to our next guest in a couple of minutes.
Raching.
All
right.
Okay. So joining us now to talk a little bit about the role of social media in the crypto markets and also.
Sorry. Well, it seems like we had a little bit of a freeze here. So if everyone can just bear with us. Well, yeah, this is what happens when you have a global show, is you have people all over the world, and sometimes you do get these little snafus. The internet isn't perfected yet.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So the markets are still processing some hawkish statements from Chair Powell on yesterday. And joining us now to discuss is Marc Chandler. He's the Managing Director and Chief Market Strategist at Bannockburn Global Forex. He's also the man behind the wildly popular Mark to Market blog. Welcome, Marc.
Thank you. Thanks for having me.
So yeah, we're seeing some interesting things right now. Chair Powell is insinuating, of course, that there could be a 50 basis point hike soon. We're seeing the yield curves. We're seeing kind of a flat, if not inverted yield curve. Those of us who have been watching the 210 spread, noticing that it's getting just tighter and tighter, and that could spell recession. So I've got to ask you this. We saw an engineered recession back in the early 80s by Chair Volcker at the time. And I guess the question is that something that we're potentially seeing happen now? That, hey, you know what? We got to put the reins on this inflation thing somehow. And that maybe that explains the aggression, if you will, by Chair Powell and some of what we're seeing right now in the yield curve.
Yeah, I think you're right. I think that, many of the Fed's critics, I think, go from one horn of the dilemma to the other. On one hand, many people think the Fed is behind the curve. They were disappointed that only Bullard dissented at the last meeting in favor of a 50 basis point rate hike. Many people hope that Governor Waller, who was the head of research for the St. Louis Fed, that is to say, he used to report to President Bullard, and they were disappointed he didn't dissent. But yesterday's comments by Powell, as you highlighted, open up the door now, underscore the risk of 50 basis points hikes. And I should say that the market is right now, looking at the Fed funds futures, the market's pricing in about 190 basis points of tightening before the end of the year. And the only way you can get to that is if there is one and possibly two 50 basis point hikes. And I do think that there is concern that if the Fed reacts to inflation aggressively, that the economy is fragile, or fragile enough in light of fiscal tightening, the doubling of the price of oil, and many people, like myself, are concerned that the Fed are going to continue to raise rates until something breaks. And the thing that's going to break is the economy.
So I mean, here we're looking at the bar chart of how the market is projecting Fed fund futures will go over the next up until 2023. But you said that you're worried about breaking the economy. But is it necessarily a bad thing in the sense that, look, we had this massive amount of fiscal spending happen during the pandemic. We've had 7.5% inflation right now. Is it an overheated economy that kind of needs to slow down as best as possible? That maybe you don't have to feather the brakes, but just a hard stop on it?
Well, I think that, what are we really talking about? A hard stop. We're talking about, many Americans are finding it difficult to make ends meet because the purchasing power of their wages is falling. That is to say, the rise of the price of energy and the rise of food prices is going to depress demand. And we saw that in the last retail sales report. If you would exclude gasoline purchases, overall purchases fell. And so when we say about breaking the economy, yes, inflation is high, and that's really the issue. Can the Fed engineer a soft landing? Yesterday, Powell suggested that it happens many times. And I think many people in the market scoff at that idea and think that the Federal Reserve has not really been able to engineer a soft landing. That is to say, bring down inflation without triggering a recession. And that becomes the key. And you say, well, maybe a recession is a worthwhile price to pay for it. It's not my call to make that. And I think that what's going to happen is as the economy weakens, and Powell already hinted at this, right, that as supply chains open up, as the base effect takes hold, as more people enter the labor market because of expanding economy, like you say, 7% or so in Q4 last year, that this will help lower inflation. And so I think the Federal Reserve, and that's what I think is surprising many people, look at what the Federal Reserve did last week with their dot plot. They revised growth down, revised inflation higher, revised interest rates higher, but kept unemployment unchanged. And so I asked myself, what's wrong with that picture? The Federal Reserve, I think, is playing up the possibility of the soft landing. That is to say, not an increase in unemployment. And I think many people are going to be surprised then when we do get a rise in unemployment.
Marc, if you're saying that people are seeing their purchasing power go down, is that a reason why we're seeing Bitcoin potentially going up today? It's a store of value. People are putting their assets into crypto. We're also seeing that ETH is climbing above the $3,000 level.
Yeah, I wish I could say that the crypto is really responding to fundamentals, but I think the chief fundamental here that crypto is responding to is the rise in equity prices. It seems to me that when I do a correlation of, say, Bitcoin to the NASDAQ, and what I'm interested in is the change in the Bitcoin and the change in the NASDAQ. And what you find is the correlation is over 60%. So what happened? The stock market is going bid. Think about what happened last week. Last 4 days of last week, the S&P 500 was up more than 1%. 2 days it was up more than 2%. 2 days up more than 1%. That is the kind of rally that risk assets like, and I think that's why crypto is primarily rallying. But I know you're right, too, that there are some changes coming up through Ethereum that promise to be to increase the efficiency and reduce its carbon footprint. That might be attracting some money and help explain why Ether is doing better than Bitcoin. But in the big picture, I think this is the thing that we've got to come to grips with is crypto is acting more like a risk asset than an inflation protection. Inflation has risen this year, and I think that Bitcoin is still down a few $1,000s.
Well, Bridgewater says on Goldman Sachs did their first over-the-counter trade. So I wonder, is the timing just coincidental?
I'm not sure what the timing is. I think that these kind of plans that investment banks have like a long shelf life. They've got a lot of hoops to jump through, a lot of regulatory hurdles to go to get above. And so, I think that maybe there was, we have seen crypto, Bitcoin in particular, trade in a range this year, or say in the last month or so, say between about $36,000, $37,000 to about $45,000. We're in that range, and I think many people are betting that range breaks to the upside, and partly because they also are optimistic on the stock market. So I'm not sure that the two are different. My sense would be that that gold has outperformed crypto this year, and that the higher interest rate environment also generally weakens the demand for non-interest-bearing securities.
So, Marc, I do want to ask you about what factors you're seeing that lead to the correlation of what you said was 0.6 in the NASDAQ versus Bitcoin. Because when I run my correlations using a 90-day correlation, it's usually at about 0.3. So on a longer term, it doesn't seem necessarily related. But I mean, maybe on a shorter term basis, if you're calculating the correlations, I could see that potentially happening. That said, one thing that's tied to the strength of or the price of Bitcoin is the strength or weakness of the dollar. And right now, you're seeing some growing strength in the U.S. dollar, primarily because of the Fed's renewed hawkishness, if you will. I kind of want to call up a chart here that you gave us. It's on the Japanese yen, the dollar yen. So that's the price of the U.S. dollar versus the yen, and we saw this spike up, which means that the yen is weakening versus the dollar all of a sudden. So can you speak to that and what that tells us about the U.S. dollar, or is it just primarily just the relationship between the yen?
Yeah, so no, I like this chart. That's why I sent it to you. The yen, partly because the dollar is trading at new, roughly, as you can see on this chart, roughly at 7-year highs against the yen. And there, I look at these correlations to see. Because same thing to the point about crypto is that the correlations don't always seem stable. And it seems to me that the dollar-yen exchange rate moves between two main, like attractors, if you will. On one hand, the yen sometimes acts as a safe haven. When equity markets are falling, the yen tends to strengthen. We could talk about why, but that is a clear pattern. And the other pattern is when U.S. yields rise, so does the dollar against the yen. And what's happened in the last couple of months is a correlation between the exchange rate and the interest rate has increased, while the correlation between the exchange rate and the stock market has weakened. And so what seems to me happening here is that the dollar broadly is, so what happens, I guess what I'm really getting at is the aggressiveness that the Fed is talking rather than what they're doing is tightening up financial conditions, and this is sending U.S. rates higher than we're seeing in Europe and Japan. Remember that even today as we speak here, one has to pay Greece to lend them money. That is to say, Greece's 2-year yield is below zero. It is kind of a shocking thing, and I think this is what's attracting money into the U.S., into the U.S. dollar. Widening interest rate differentials mean that one is really paid to be long U.S. dollars. And I think that is the sort of the current fad. And I would look for that fad to begin weakening as other central banks begin hiking rates more aggressively. Perhaps as early as next month, we could see the Bank of Canada or even the Bank of England continue to raise interest rates while the Fed doesn't meet until May.
So let's step back a bit. Let's look at, just a little bit, 6 months to a year, which is kind of still fairly short term. We have the competition of attracting capital through all these interest rate hikes all over the world, if you will. And we're seeing in England, et cetera. And so what do you see happening over the next 6 months to a year? Granted, we're in the middle of a war, so not the U.S., but the world is watching Russia and Ukraine, and that's having effects in the commodity markets. Nonetheless, what do you see happening?
Yeah, well, so for me, I think one of the things that I would emphasize is that typically, that is to say, the last 3 U.S. recessions were preceded by a doubling of the price of oil. And I know that many people, as we look at it as investors, we see higher oil prices, higher food prices as inflationary. But I really want to suggest to you that it acts as a big brake on the economy. It's a big tax on consumers. It's a big tax on us, on our households. And so what I'm worried about, and I think is going from a risk scenario to more of a baseline scenario, is that the U.S. economy cannot cope with tighter fiscal policy, tighter monetary policy, the doubling of the price of oil, the maturing of the inventory cycle, and the drawdown of American savings. And so I think that not only do we head for recession, but so does Europe. And I'm not sure whether it's a deep recession or a shallow recession yet. I think it still has to be played out. But I think we should be preparing for that. And the higher interest rates is part of that story. And so I think that what's going to happen is that the U.S. economy, we have very slow growth here in Q1. Powell already hinted it. I think the Atlanta Fed is talking about 1.2% growth in Q1. Maybe we get a little bit of a bump in Q2, partly because, remember, COVID began the year at a soft note for us. But I think in the second half of the year, we're going to be lucky to grow 3%. And by the end of the year, I think we're going to be looking at below-trend growth. And that's what's going to get the Federal Reserve, what's going to stop the Federal Reserve from hiking when the economy begins weakening. This is going to be the first Fed rate hikes since those late 70s, early 80s. The Fed is raising rates, even though real earnings, that is, our take-home pay adjusted for inflation, is falling. And so I'm concerned about the outlook for the U.S. economy. I'm concerned that that these combination of forces slow the U.S. economy, tilt us into recession, and that also helps lower the price pressures.
All right, Marc, thank you for your analysis. Thank you for joining us. That was Bannockburn Global Forex Managing Director and Chief Market Strategist Marc Chandler. Coming up, Avalanche founder and CEO Evan Gunsayer in Barcelona. Seeing a lot of green in the crypto markets right now. The CoinDesk Bitcoin price XPX index is at $42,987. Bitcoin climbing almost 4% over the past 24 hours. The CoinDesk Ether price ETX index is at 3,010. ETH is also up about 2.5%. And the DFX CoinDesk DeFi index is at 264, rising over 3%. All right, AVAX, the native token on the Avalanche protocol created by Ava Labs, shooting up 30% over the past week leading up to Avalanche Summit, the community's conference in Barcelona. Note to viewers, I will be participating on a couple of panels at Avalanche Summit. If you're around, hit me up. All right, joining us now with more is Ava Labs founder and CEO, Evan Gunsayer. Welcome, Evan. Thank you for joining us. So in addition to the price rise, we've seen an increase in AVAX unique wallet addresses to over 2 million. Total lock value is holding steady at around 11 billion compared to other chains that are currently experiencing a lot of volatility. So what's behind this recent growth?
Caitlin, thank you very much for having me. We've seen in the 15, 16 months that Avalanche has been out, and tremendous growth. Not only have we had enormous growth in the number of users, we have over 2 million users now, but we've seen hockey stick growth in monthly active wallets. We've seen an enormous amount of value in total value locked. What's behind this is just the kind of technology that many other projects strive for, that Avalanche has delivered reliably. We have delivered through a superior consensus protocol, very high transactions per second, and very, very low time to finality. So much so that interacting with the chain feels almost like interacting with a website. And in addition to that, we have the subnets that allow us to accommodate many different use cases on top of our platform. So those two facts combined, along with all sorts of partnerships we've had with blue chip dApps and applications, DeFi applications, have given us tremendous growth. And we're now poised for growth in the GameFi space.
Yeah, so, actually, we have a image right now that we're showing of the subnets out there. You know, when you talk about it, it's kind of confusing without the visuals, but I understand Avalanche's goal is to tokenize all assets. And earlier this month, the Avalanche Foundation announced a multiverse incentive fund of 4 million AVAX tokens. That's now worth about 350 million in today's prices to incubate these subnets, which are those application-specific blockchains on Avalanche that are supposed to scale the protocol horizontally. So what are the big projects that are building subnets, and what will be the first killer use cases?
Well, there are quite a few, actually. So one of the first things that I'm really excited about are DeFi applications that currently are experiencing high fees that are moving to their own subnets. So we've seen, for example, that AMMs are very successful, but they unfortunately are plagued by high slippage for their users. And we haven't seen central limit order books, decentralized exchanges that are actually kind of like the markets we all know. They haven't taken off on regular blockchains. They consume too much gas. So some of our DeFi applications that consume a lot of gas, we would like to move to their own subnets. Prime among these is Dexalot, which is a central limit order book application, very familiar to your listeners and audiences from TradFi. Another example is games. We have Krabada, which is a very, very popular game. It's unfortunately consuming a lot of gas on chain and creates a lot of load. And that's a perfect example of the kind of thing we would like to move to a different subnet where it's isolated from the price action on the main network. And there it can have its own token, be used for all sorts of other things. And it can also be isolated, and its impact on the other DeFi applications is minimized. And there are many other cases like this. We're also building in a very different space a partnership with Deloitte, where Deloitte is actually using its own subnet for keeping track of emergency of FEMA aftermath disbursements. So post national emergency disbursements to people. They would like to keep track of what's being paid to whom, but they want to do it without having to pay fees on the main network. So, and I could have many other examples in between. Anything and everything that is that would like to isolate itself from activity on chain, that would like to use its own tokens for things other than whatever servicing the main chain, would be fantastic to support on a subnet.
So good, you have this very active community now, as Christine was saying, just growing on Avalanche, and obviously you were very active, of course, in Ethereum prior to starting Avalanche. How much of that overlap do you have there in the community in Avalanche and Ethereum? How much of that are people that you've taken out of Ethereum, if you will, and gone to Avalanche, or is there still a lot of overlap?
There is some overlap, of course. I myself am an overlapped person. I started out from Ethereum, as you mentioned. Now I'm working exclusively on top of Avalanche because it's so much nicer, faster, and cheaper. But I would say that we've added to the overall community. So blue chip DeFi applications that we all know from Ethereum are now bigger and better. because of Avalanche's presence. I think the overall EVM community has prospered, and people who have learned Solidity now have multiple venues on which they can deploy their applications. And the sum total value that we've created as a space is larger because we are here. So I don't think that we are in any shape or form carving out the same set of users. I think we're adding to the general pool of users. And if you ask me what's going to happen in the next 5 to 10 years, is tremendous growth. And we need platforms that can absorb that growth. And Avalanche is chief among them.
So, of course, everyone's in Barcelona right now for this event. What are they there for specifically? And is it different than what you expected? Are people interested in aspects of Avalanche that you're seeing when you're physically there, when you're physically seeing these people in person, compared to what you thought they would be interested in? Is there a topic or an application or something where you said, wow, that I didn't expect that to be so big here?
That's a great question. So overall, this is kind of like a festival atmosphere over here, and there's a giant celebration going on. Avalanche was born mostly during the pandemic. We did not actually get together. This is our inaugural. It's the first time our community is meeting each other in real life. And it's an amazing, amazing event. So I am humbled by the activity. We're sold out. The entire platform, the entire event is sponsored, and there's so much commercial interest in building things on top of Avalanche. This is the very first time that the community is getting to know each other, and I'm seeing a lot of interest from areas that I did not expect. One of them is, and we all know that DeFi is very strong on Avalanche, but an area that I did not realize was growing tremendously with a very deep pipeline is GameFi. And GameFi is huge, and subnets appeal to games that want to isolate themselves from activity on chain. There's another area, the sort of Web3 applications to expand, but have not been able to do so because of gas concerns, are now able to deploy on top of subnets. So the Multiverse initiative that Caitlin mentioned has brought out everybody who has a use case but has concerns about overlap with other chains or has concerns about load. So overall, as I said, there's a giant festival atmosphere, and we're all thrilled to see each other. We're all thrilled to meet each other. It's been a fantastic event.
I want to zoom out for a moment just about the larger prospects for DeFi in general, particularly in the U.S. So, as you know, there was just an executive order that was released. And I'm just curious what you think are the prospects for regulating DeFi. Do you see this as something that, are you optimistic about this, or do you see a potential tightening in the future? Just since you're so involved in this world, I'd love to hear your just outlook on the regulatory prospects.
I cannot wait for regulatory clarity, and I speak for every DeFi founder. I think because I've spoken to all of them. I'm obviously a platform founder, but every single DeFi founder I have spoken to says that they're desperately in need of better clarity from the regulators. They need bright line rules for how to proceed. We've shown to the world that these assets are very different, and they can provide built-in rules into the fabric that allay the regulators' concerns. Things that the regulators are used to enforcing post facto, we can build into our infrastructure. And so that is a huge position to be in. Now, of course, we do need that there are legitimate concerns still around stable coins. There are legitimate concerns about securities, etc. But the sooner the regulators can achieve clarity on that front, the sooner the area is going to explode. So I'm super bullish about regulatory clarity. I am not concerned about regulatory concerns killing off the area. I think we are big enough now that the regulators will have to work with us and will have to accommodate the activity that's going on. I think the regulators themselves are very, very bright, very well tuned in, and they understand that these new platforms are bringing value in ways that to a TradFi that was mostly stagnating on the technology front.
And then, do I have this right that Anchor Protocol is building a bridge to Avalanche to go interchain? And if so, I wonder if there are any concerns about exploits of cross-chain bridges. And I did see that Do Kwon, the founder of Terra Luna, tweeted out that this week there will be perhaps some sort of announcement. Could you give us a preview?
So first of all, let's talk a little bit about bridges. I keep saying that there's no layer ones, there's no layer twos. It's all bridges and chains. And what we're going to see in the next a year at least is going to be bridge wars. People who are going to come up with better and better technologies for integrating chains with bridges. So that's going to bring us much better liquidity, and capital will flow, assets will flow to the chains that can accommodate them best. And this is going to be great for the space. Better liquidity and less barriers between chains is going to be good for all of us, good for consumers in general. As for Doe and Luna and Avalanche, I don't want to front run my press team, so I will defer the announcement to the time when it's made. But we are thrilled about our connection to Luna. We're thrilled about our friends there, and I cannot wait to grow the space through partnerships, through better connectivity between projects.
I gotta say, it is a very festive atmosphere here. It's a pretty good job in what I've seen so far. So, Emin, thank you so much for us today.
Thank you very much for having me.
I know you got a lot of busy crowds to address. That was Ava Labs founder and CEO Emin Gun-Sirer. Coming up, checking in on CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
Hi, I'm Michael Casey, Chief Content Officer and co-host of Money Reimagined. You're watching CoinDesk TV.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk, the State of Crypto newsletter. Good morning, Nick. So what's cooking at the SEC?
Good morning. So we're keeping an eye on a couple different proposals that the SEC is currently reviewing, one of which is the proposal from yesterday about ESG. So looking at environmental concerns in particular and how public companies are addressing climate change risks. Now, in particular, we have a couple of public crypto mining companies in the U.S. as well as Coinbase, the crypto exchange. And it's very possible that these companies are going to have to pay close attention to this proposal and how they'll have to abide by, the different disclosure requirements that the SEC is suggesting. And the other proposal we're looking at is something that the SEC has been talking about for a couple months now, looking at how they define exchanges and alternate trading systems, and whether or not DeFi platforms, including decentralized exchanges, are encompassed in that definition, which would impose some strict disclosure rules and requirements on these exchanges and platforms that they might not be able to comply with just because they don't have the necessary information or the necessary structure to comply with it the same way a public company could.
All right. I think we'll edit there. Thank you, Nick. Thanks for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So one of the big topics in the current war in Ukraine has been social media, as we have seen a lot of activity on the part of both Ukraine and Russia. And our next guest, Lunarcrush, collects activity across social media for Bitcoin, thousands of alts, and exchanges. So welcome to Joe Vezzani, Lunarcrush, co-founder and CEO.
Good morning, and thank you so much for having me.
Thank you for coming. So let's just start with the biggest social media story right now in this whole Russia-Ukraine conflict, which is that Meta, Instagram, and Facebook have essentially been banned from Russia. What is the significance of that, in your opinion?
There's a huge significance to that. When you think about, the folks in Russia, some of the more regular common folks that are out there trying to understand what's happening in the world, it's going to be a little bit more difficult for them when they can't have access to any social media. However, there is a whole other side of this where there's also a lot of folks that are in the Ukraine trying to understand what's happening and trying to kind of protect themselves against misinformation. So I'm sure they're going through all of the standard practices of Meta and Facebook, and they're going to go out there and try and kind of put their best foot forward. But as we know, it's always been a difficult path for them.
So you sent us some charts. Let's go through them. So first, we have a trending post that you are looking at. Can you just walk us through this?
Yeah. So for anyone who doesn't look at the financial markets from a social perspective, at Lunarcrush, what we're doing is we're collecting all of the crypto-specific data across places like Twitter, Reddit, YouTube, and we have the largest subset of news that's crypto-specific out there. And this post that was put out by Ukraine was actually the most engaged with and most influential post over the last 1 month in the crypto space, which is saying a lot because we did have a banter back and forth between Michael Saylor and Elon Musk, where Bitcoin was mentioned when they were talking about inflation. And so in order to beat out that type of influence and engagement is very, very difficult. And so for this post to be rallied around the way that it was pretty impressive.
What's the reason for it? Do you have any analysis behind that?
This was an unprecedented event for crypto. And so, Bitcoin and Ethereum and Web3 tokens made it through the Russian invasion of Ukraine with both a reminder of the use case and no major mishaps or news that went on. And so just survived something significantly, potentially adverse events. And I think investors are deciding that it's worthy of an up round. And so what we're seeing is a lot of folks out there that are looking at this situation and saying, where did crypto fit? And how did it become a part of this? And we're just happy that there's a lot of good news that's coming out of that versus negative news.
So you have a bunch of other charts. Can we go through them very, very quickly, just sort of the main takeaways for each one. So let's start with the first one.
Yeah, so what you're looking at here is we have a couple different metrics that we're looking at from a global perspective. And so when we say global metrics, what you're looking at is all of the crypto-specific mentions across Twitter, Reddit, and YouTube, and all the news. And then contributors is how many people are out there talking. And so what we're doing from a broad spectrum is we're looking for a couple things. How many people are talking? And then at any given point, are there more people talking more often? Are there less people talking less often? And everything that's in between. And so what we saw here with what's went on with Russia and Ukraine was relatively no impact. We didn't see a massive spike in social. We didn't see a massive fall off in social. What we saw was kind of the regular ebb and flow of conversation that went on, which meant that, even though there were some pockets of information that had changed over time, we saw just kind of this kind of sideways market when it came to how many people are out there talking, which I think is kind of this overarching thought process around crypto just kind of being there, and the folks that are in there that are always going to be talking about crypto are always going to be talking about crypto.
Okay, and the next chart.
So this is a 1 month activity. So you can see on the red line there kind of like where this begins. And so for social volume, it's a little bit different than social contributors. So it's the total number of mentions versus the unique individuals who are mentioning all the different crypto projects out there. And you can see a pretty tight correlation here between social volume and market cap. So the total market cap of the entire cryptocurrency market coming together in one. And you can kind of see as social and as more people are out there talking and feeding that information back to the marketplace, you see some of this tight correlation going on with people kind of selling or coming back in and buying.
And finally, I think we have one more.
Yeah, so this is when you look out at a 1 year activity of the social contributors versus social engagement. And so contributors, like I said, unique individuals out there talking, and engagement. I mean, we're looking at 7 billion engagements that are happening out there. That's people retweeting, upvoting, commenting, liking across all of the social media networks. And what I wanted to show in this chart was, even though we're kind of moving in a sideways market right now, if we look back and we zoom out a year, we're looking at a massive increase in the number of people that are out there that are engaging online with people talking about cryptocurrency. And so if you're starting to get used to understanding how social impacts some of what's going on, What you're really looking for is this kind of groundswell over time of individuals and unique people that are out there talking about cryptocurrency. I mean, you just had folks from Avalanche on just before here, and I would say that's a great example of a project where the number of wallets is one thing. Now, if you look just before those number of wallets started to grow, what you're going to see is way more people online talking about it and gravitating towards it. And so what you're trying to understand is how many more people over time are talking about what's going on.
So Joe, as a trader, if I'm looking at this and I want to make money off of it, what am I doing? Am I looking at the trend first? How am I trying to play this from a market's perspective? Where do I buy? Where do I sell in terms of like watching the activity on social? How much of a lead time do I get? How much to buy and how much of a lead time do I get to sell?
I think it depends on the type of trader you are. If you're a swing trader and you're someone that's looking to take a long-term position, maybe you're someone that's like, hey, I'm holding a lot of Bitcoin and I'm looking at a layer one. I'm trying to understand, do I invest in an Avalanche? Do I invest in a Terra, an Algorand? Do I go to a Stacks? What do I invest in across these layer ones? You might be looking at things like, hey, what does the community look like across some of these projects? And you're kind of validating. We're kind of becoming a place where you need to make a stop at Lunarcrush to really understand the full story of what's happening with all of these projects. And so you're looking for a kind of community over time. And then if you're looking at maybe some smaller projects that are out there, maybe you're looking at a quick spike in social engagement. And so as we're out there listening in real time, we're helping people identify, well, you can go and set an alert and say, hey, if something increases 1,000% in social volume in an hour, that's now something I need to go look at. And I need to take an idea of saying, hey, is this something that's tradable right now? Is there market volume that's available to take the amount of capital that I'm trying to put into what I'm trying to put into? Because a lot of these projects are really small. So we allow people to set up alerts across the entire market, and then we actually are scanning the entire market in real time and looking for anomalies ourselves.
It also struck me as very interesting that in Ukraine and Russia, you didn't see much of a change in the ebb and flow of social media. But do you have a sense of that, the info is getting to folks in, say, Russia because of the blocks and the media blackout that they're having?
It's really hard to tell at this point, especially with what's going on and where, I think it's more of going to be a survey across some of these social networks. But, in the crypto space, everyone's used to VPNs and kind of, logging into places that, and being in other places, traveling all around the world. So, I think they're probably getting a lot of what's going on, but it's very, very difficult to tell.
All right. We'll end it there. Joe, for joining us. Thanks for the charts and the information. Appreciate your insight. Joe Vezzani. That's First Mover. Thank you, Emily Parker. And salute to your host, Christine Lee. Meantime, check out the folks at Hash at noon Eastern and all about Bitcoin at 3 o'clock. You're watching CoinDesk TV. Also, next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Could Malaysia be next in line to make Bitcoin legal tender? Welcome to the Daily Forecast, March 22nd, 2022. I'm Angie Lau, Editor-in-Chief of Forecast, covering all things blockchain. Well, El Salvador was first, then Ukraine. Now Malaysia's Deputy Minister of Communications and Multimedia has said the country should investigate legalizing cryptocurrencies. We're going to take a look at that story, plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Well, let's kick off another significant step for progress towards the widespread use of cryptocurrency. And we're talking about Malaysia here. Its communication ministry has proposed that cryptocurrencies like Bitcoin be adopted as legal tender. Responding to a question in Parliament, Deputy Minister Zahidi Zainul Abidin said he hoped the government can allow it. Henry Chong of Malaysian exchange Fusang told Forecast the minister's statement is a clear sign of a commitment to the future.
We've obviously always believed that Malaysia is really at the forefront of thinking about both digital assets, but also thinking about how to properly regulate these things. I think digital assets are an exciting market, but it's very important that we have ground rules of the game. Designating things like crypto as legal tender is an important first step towards that.
Chung says Malaysia is already ahead of the game in many ways, with over 80 digital players already licensed in the Labuan Mid-Shore jurisdiction of the country. Meanwhile, the country's central bank is also studying a CBDC. Chung adds that making cryptocurrencies legal tender is a move that all countries should be taking a look at so they can move towards becoming a convenient currency payment mechanism for all. Meanwhile, it's a different story for India, as the country is still not taking a stand whether or not it will legalize cryptocurrency. But one thing's clear, India is working to come up with a tax law that will cover digital assets. In its latest statement, the Indian government clarified that profits from one virtual digital asset, or VDA, cannot be used to offset losses of another and claim deductions during tax filings. The clarification comes less than 2 weeks before the proposed crypto tax that takes a 30% tax on crypto income, as well as a 1% tax deducted at source on every transaction. And that all comes into effect on April 1st. Now, in a tweet, Ashish Singhal, founder of crypto exchange CoinSwitch Kuber, called the move detrimental for India's crypto industry and for the millions who have already invested in this asset class. As for Wazir X founder Nishal Shetty, he said it is discouraging crypto and discouraging innovation. He added that he hopes the government will hear the youth and ensures that the industry can remain competitive. You can find those stories and more at forecast.news. Well, the U.S. Fed announced a 25 basis point rate hike last week, the first in over 3 years. We have the Bank of England and even the Taiwanese central bank also hiking interest rates, partially driven by the surging inflation we see around us. The question is, what impact will this have on digital assets in the near term? Well, let's find out from Damien Lowe, CEO of Matrix Asset Management, a crypto financial services company serving both institutional and individual investors. And it's great to have you with us, Damien.
Great to be here, Angie.
All right, no doubt those investors are really clamoring for some answers here. Now, the Fed just hiked rates for the first time after keeping them close to zero for, over 3 years? And there's also indication that we're probably going to see 6 more interest rate increases before 2022 is out. How do you see this impacting crypto?
Well, I think it's definitely going to be quite impactful for crypto because everything said and done, crypto is still an asset, and all assets will come down in value overall as the Fed starts hiking. The Fed in general also has a tendency of actually hiking till everything starts breaking down a little bit. And I think they will have that similar trend this time around as well. So what we'll see is that assets will be going back down closer to the ground level. And crypto and digital assets are no exception to that rule, I think, overall.
So you think we're going to see pressure on crypto? What about Bitcoin here, the original cryptocurrency, often considered akin to gold as a store of value? They call it the digital gold, after all, in some parts of the world. It's an asset that some say that people would look to in times of uncertainty. What's your long-term outlook for Bitcoin as we see a lot of people start talking about a $100,000 target here?
I think there is generally 2 big drivers of Bitcoin overall. It's the general adoption of it as a store of value and it as an asset overall as well. Here at Matrix Asset Management, we really do believe that in the inexorable rise of digital assets overall, The timing might be hard to really pin down, but we really believe in the overall beta and in the natural overall uptrend in a secular way over the next few years or so. The exact path it takes, however, might seesaw back and forth. So yes, I think it will at least take some of the shine from gold as a store of value. You can actually see gold this time around as well could not make all-time highs, even though everybody was looking for an inflation hedge. So the pull down in assets has affected not only Bitcoin, but also gold as well. But I do believe that it continues to be a store in value, and people will continue to believe in it. But there might be some short-term pullbacks right now.
Despite the short-term pullbacks, a lot of people also say that the correlation with institutional and growing institutional interest also creates some spillover effect. And with Bitcoin and crypto as a real asset for a lot of people, what do you think in the macro environment this is going to mean for crypto, especially major risks for crypto besides the interest rate hikes and geopolitical tensions?
I think as this institutional adoption continues, we'll start to see it having really an exponential contribution to the trend. It's really that the use of it begets more use of it, and overall, as there are use cases that are built around Bitcoin, we'll start to see it really accelerate in terms of its adoption and its transition over from gold to Bitcoin overall. What I mean by that is building out custodians, having derivatives that lie above Bitcoin overall as well. Having very specific use of it as collateral, and it adopted by institutions overall. Regulation as well is a big thing, and I think as we see more clarity from regulation in the US and Singapore, which has been ahead of the curve, we'll start to see that as another major driver of the Bitcoin as a store of value. Fighting neck and neck with gold overall.
And that's the market action, and let's see what the market will bring forth. Thank you so much for joining us with these insights, Damien. Really appreciate it.
Thank you, Angie.
And finally, a lesson in it's never too young to get into technology. Hong Kong-based programmer and creator of the Crypto Tigers collection, Miguel Wang, is just 11 years old, and he joined the NFT business after starting to learn to code at the age of 6. Forecast's Carolyn Wright has more.
Miguel was only 5 years old when he discovered a love for computers. And after his parents suggested he learn to code, saying it's the language of the future, he was hooked. And then
last year in March, when I saw the Beeple, he sold his NFT for $69 billion. Basically, everyone was very curious, what is this NFT thing? And I was also very curious, and I got into it because it's completely digital and it's highly related to coding and programming.
That curiosity led to the creation of his Crypto Tigers collection, where Miguel did everything from making the contract code and metadata to creating the art and the website for himself, as his parents aren't into technology. He says that took 2 to 3 weeks from start to finish, and he chose to create 888 tigers as he was born in the year of the tiger, and the number 8 is seen as being very auspicious in Chinese culture. Miguel made this collection on the Ethereum blockchain and says his future plans are to try using other blockchains like Solana. His top tips for a great NFT collection are that it needs to have meaning as well as good marketing and a user-friendly interface. And his advice for anyone wanting to follow in his footsteps?
First, always be curious. You need to have the urge to learn something new. And once you learn something new, don't give up. Because if you have a problem, if you encounter one, there's always a solution. And whether that's on YouTube or you can ask someone else, there's always a solution. So just don't give up.
As he said on Twitter, he did everything by himself at the age of 11. And if he can do it, so can you. For Forecast, I'm Carolyn Wright in Hong Kong.
And that's the Daily Forecast, bringing you what you need to know in the blockchain space from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.